Tom, I don't even know if you need an introduction at this point. People tune in to hear. Sometimes it's almost like a salve. And I think you're going to give us a little bit of that today for our wounds from yesterday, but not entirely, because you think the S&P is probably going to be flat for August overall.
Yes, that's right.
And that's unlike some of your recent calls about the S&P with friendlier inflation data. You've made some calls about some big near-term moves. That's not what you're saying today, unless you're talking about small caps.
Yes, that's right. I think part of what we saw yesterday was, the rotation that's painful away from large caps. And I think Tesla earnings and Google sort of accelerated some of that. And I think there's been some uncertainty about the Fed's commitment to cutting, even though we expect inflation to fall like a rock. But when the Fed starts cutting, that's good for small caps. And there has been, I think, overseas, some unwind of that Japan carry trade that's hurt the NASDAQ. But to me, this is why the S&P had a great first 6 months. Maybe it needs to consolidate those gains. But now Russell 2000 has an 11 median PE, earnings growth 800 basis points faster. And, it just posted 11 days where 10 out of 11 days had a 1% move. The 9 times it did that since 1979, when you weren't in a bear market, we were up 100% 1 month, 3 months, 6 months, 12 months later. 12-month average gain 40%.
You're very popular, and I would warn you this is not good that you're saying this. You think this rotation has been driven by expectations of a Trump White House? Is there another way you can say that? Can you come up with something else so you don't have to delve into the political side? You think Trump's going to win the White House, or you think the market at this point thinks he's going to win the White House? Yes,
it's the second. Okay. Betting markets are putting a 65% probability of a Trump White House. The biggest beneficiary, which is deregulation, M&A, regional banks doing better, that's small cap stocks.
Okay, so that's the linkage that you're seeing then. So you really think we've seen a Trump trade, and even after, the betting markets have moved somewhat. He's come down. Vice President Kamala Harris has moved up a little in the betting market since the weekend when the news came out. You still think that that's at play from here on, not just to explain the rotation that we've already seen? You think it's going to continue?
That's right. So I think it's from this point forward, there's a lot of opportunity in small caps. Part of it is that there's a lot of overlap. When the Fed cuts, that's lowering cost of money. That's good for small caps and the regional banks. It probably boosts CEO confidence, which is M&A, and that benefits small caps. So there's a lot of overlap between a Fed cut imminent and a Trump White House, and that's why I think the interplay is positive for small caps.
That's interesting. So
I still don't understand. You don't think the large caps are done. You just think it's a slowdown for the S&P 500 on a broader level?
Yes, that's right. I think the Mag 7 was very attractive at the start of this year because growth was scarce and they've had great visibility, and they're not expensive. 27 times earnings isn't demanding. But now that there's a visible catalyst for small caps, I think investors are taking some profits up. NASDAQ was up 20% and putting it into small caps.
We were talking earlier, though, just about the Mag 7 in particular and the spending on the cloud. If Alphabet's results are indicative of what we might hear from Microsoft and Amazon next week when it comes to the cloud, where they are spending a lot more than they're able to bring in at this point, is that a problem? Is that... Because it feels like there's a little bit of a sentiment shift, too.
Yeah.
Even if it's a brief one and early on.
I agree. I think perception is really important for equity valuations, but the money spent by these companies on AI has a high expected return because they have moats that are getting stronger, and there aren't companies like this anywhere else in the world, so they're very scarce. So I don't think it's wasted capital, but if investors want free cash flow or if they see 11 PE stocks and small caps, that's what's becoming incrementally attractive.
So a flat S&P, but a Russell or a small cap gain of 15% in the month.
Yes,
possibly.
That's right. I think for the month of August, small caps can do something more than 15% even because they've underperformed so dramatically. And the type of move we've seen just in the last 2 weeks is something that only happens at the start of a pretty significant advance for small caps.
Do you think that the earnings that we see for the big caps, will they continue to confirm your case that maybe, could anyone blow their results out of the water and change this for big caps and say, wow, we're wrong, things are still okay, so that it doesn't, because yesterday was 600, whatever it was, 600 plus points. That had a lot to do with earnings. Not completely. It seemed like it was ready to happen anyway. But do you think there'll be any surprises that are better than people thought in that group?
I think so. I mean, at the end of the day, I don't think these companies are not capable of positive surprise. A lot of good news was baked in. You know, the line in the sand ultimately will be NVIDIA when they report, which is really the last one to report. You know, I think over the next 10 years, the outlook is still really good for all these companies. So I don't think investors should lose faith, but profit taking kind of makes sense.
Alright guys, this is the part of the video where I'm going to break down the stocks that were mentioned in the CNBC clip. Today they talked about the Russell 2000 and small caps, how they're going to gain another 15% in August. They also talked about the S&P 500 and the NASDAQ going to be flat in August. So we'll briefly break down those three ETFs and then we'll take a quick look at Tesla and Nvidia. They had some pretty incredible price action this morning. We'll start with the Russell 2000 small caps. So as we just heard, Tom Lee is calling for another 15% gain from here and just in the month of August. I went ahead and marked that out. That's up here at 2,579. You can see how parabolic of a run we would have to get all the way up there. This is a beautiful bullish flag with lower highs and higher lows right in the middle. These normally break out to the upside and become very bullish. If we start losing price action and get down below 2,200, we're going to start looking bearish. As of right now, the daily chart on the Russell 2000 is looking extremely bullish, guys. A lot of these small caps are extremely oversold. The Russell did a great job over the last couple months making that 45-day moving average a very nice support. And blast off, here comes the move. He's saying we're not even close to the end, guys. He's calling for 25.79. So hold on to your seats. All right, on to the S&P 500, guys. If you've been watching my channel, what was I saying back here? I was warning for a pullback. We were getting extended off the 45-day moving average. We're well off this ascending trend line and way, way off the 200-day moving average. This is a nice, healthy pullback perfectly to this ascending trend line. And look, we're getting bought up right off of it. So as of right now, I think the SPY is in a good buying opportunity. I think we're done going lower for now. We should be able to consolidate, hold this trend line, and keep going back up to the upside. If we do somehow start rejecting this trend line and get below it, watch out below, guys. It is going to be nasty. On to the NASDAQ, the same exact thing, guys. We were way up here and I was saying, look at the distance between the 45-day moving average. Look at the distance between the 200-day moving average. And we came almost to the penny perfectly back to this ascending trend line, guys. We touched it in November. We touched it in April. I was pointing this out in my last video. We were still up here. I was saying if we don't hold this 45-day moving average, guys, the next stop is going to be this ascending trend line. And look at today's price action. It was a complete shakeout. The NASDAQ also seems to be done going lower. We might consolidate and hit this line again, make it nice support, and then head up to the upside. And the same goes for the downside. If we break this line, guys, look out below. It is going to be rough, but I do not see that happening. This was enough of a sell-off, a nice little correction, and a healthy bull market, and we should be back to the upside, guys. I wanted to take a quick look at Tesla, guys, and show you. I've been calling this multi-year trend line in all of my videos that I break down Tesla. And look what happened. We broke all the way down to it, respected it the last couple of days, broke through it, and came back above it, and now we're holding above this trend line. It is a very important level at 220. This has been a major trend line since 2022. We got rejected several times all the way along. We've broken back above, and now you normally come back to make it support before going higher. We were calling it up here, guys, at 266 when I sold my position, and I was able to buy some back at 218, way down here. So a great little buy for the long term. Also wanted to take a quick look at NVIDIA. Look at the fake out. We opened up, went from 114 straight down to 106, guys. I put some bids in at 109, was able to get a couple shares, and look, straight back up. It was a complete fake out. NVIDIA ran 8.88% in a straight line after falling completely off a cliff. That's what the bottom of a sell-off normally looks like, and that's why I'm confident buying and confident that we should be going higher. Remember, these are just my thoughts and opinions. I hope you guys enjoyed the video. If you did, smash that like button and subscribe if you haven't already, and I'll catch you in the next one. Peace.